Hey everyone, and welcome to this Tuesday, July 23rd edition of FreightWaves Now. Today we've got Donny Gilbert giving us an update on reefer and Henry Byers giving us an update on what's happening in the maritime lanes.
Donny Gilbert here talking about reefer tender rejection rates. Similar to yesterday, we're looking at dry vans, but today we're going to look at reefer tender rejection rates. I brought a similar map that has both outbound tender volumes along with the reefer tender rejection rates throughout the month of July. We see here, this is our 4th of July, where tender volumes drop down. About on the 10th, it came back up, but as we see, reefer tender rejection rates have fallen down all the way from the 10th of July down to the 22nd. We were at around about 18%, and we've dropped down to 10.06% for the reefer tender rejection rates. A lot better than the 3.86% we saw yesterday for dry vans, but still, we don't want to see the declines. In terms of your shipper, this is actually good for shippers because showing that the spot market rates have come down, so shippers are paying a little bit better of a price. But for carriers, it puts them in a bind. So let's kind of switch over now and look at our national map of the markets. We start east of the Mississippi, and it's a pretty grim outlook for east of the Mississippi. You see a lot of these markets that are in white. The markets that are in white are less than 8% for tender rejection rates. In the Northeast, we have Allentown, PA, has about an 8% tender rejection rate, and that's the highest market in the Northeast. The rest of them can be anywhere from 2 to 4%. Moving down to kind of the Southeast, 13-14% tender rejection rates in Columbia, South Carolina, and the markets that are in Virginia. The rest of the Southeast has tender rejection rates that are well below the 7%. So we've seen the produce volumes drop off in the Southeast, and produce season is kind of winding up just the way as it started. The volumes that started out in Florida and picked up through the season are now winding out, starting down in Florida. And as we move up through the month of July, the volumes in produce are dropping. You know, produce season is really year round. You can always grow produce in all the states, but right now the peak season is what's kind of winding up. Moving over to the Midwest, we still have our area where a lot of poultry is produced. So here are strong markets. You got Memphis, Tennessee, around 38%. Moving over up into here, around 20-21% throughout the Midwest, Iowa and Nebraska. Salt Lake City and up into the Washington area. These are strong tender rejection rates, running 25 to 35%. Over to the West Coast, it's still pretty light again. You got a lot of markets with rates that are less than 7%. Fresno, California is your hot spot on the West Coast, around 9% in Fresno.
Hi, I'm Henry Byers, and today we're taking a look at the Freightos Baltic Daily Index, which is representative of 40-foot container rates in the spot market. And I want to show shippers as we're moving into peak season, and they start to move more volume on the import side, generally from East Asia, what's going on across all 7 major trade lanes throughout the world. So what I have pulled up here is a tree map. What it's showing, we read this top to bottom, left to right. Top left having the greatest overall value, so in this case would be the greatest dollar amount per 40-foot container. And then as we move to the right here, it decreasing as we go on. But what I wanted to show most importantly, China, North America, East Coast, China, North America, West Coast. As we're moving into peak season, a majority of volume actually moves on those lanes. So on the 15th, we had a slight increase that was primarily due to the Panama Canal draft restrictions, and those vessels traveling through the Panama Canal actually couldn't carry as much cargo. That ended up being postponed, but still had an effect on rates. Same thing to the West Coast, rates did go up, obviously not due to the Panama Canal, but just due to increased demand on that lane, but it quickly has dropped off. Then I wanted to point out a couple of other lanes. We have all the export lanes to China. We're seeing an increase, a 24% increase from East Coast to China, and then West Coast to China. We're also seeing a 10% increase. Another thing I wanted to point out is the Panama Canal spread. So this is the difference between East Coast rates for 40-foot container and West Coast rates. That's showing you really as a shipper, as that spread increases, you know, West Coast could actually become a more attractive option. As that spread decreases, showing East Coast could potentially be a better option, because the cost between those two is really how you're having to make decisions on your routing. So I wanted to turn to the Panama spread, and right here we're showing that those draft restrictions in the Panama Canal had a serious effect on rates on the 15th. So that decreased ability to carry containers, the carrying less cargo overall per vessel has actually led to that spread increasing. So you could see shippers, or you could make the choice to move West Coast depending on how much that spread continues to grow. And it's easy to see also beyond the Panama Canal, we actually see that New York, Savannah, Norfolk, all are seeing year over year changes, pretty substantial changes year over year. So we're looking at New York having about a 12% increase. We're looking at Savannah having an 11% increase year over year, and then Norfolk at a 10%. Interestingly enough, Los Angeles is actually seeing a 5% decline year over year. Primarily that's due to Long Beach and the decreased volume going into Long Beach, because we're actually showing these combined in this metric here. Los Angeles is actually seeing a bit of an increase, but overall those two ports together, which is generally how that plays out in the truckload market, is seeing a decrease year over year.
Watch out, East Coast. Here comes some more volume. Thanks for watching. Make sure to subscribe to our YouTube channel and follow us on all our social media outlets. Everybody have a great Tuesday.